Okay, welcome to some exam help stuff for those of you doing Unit 1 for accounting this year. This here is going to run through this exam here. Just follow the link below, hopefully, to find the example on the website for OCR, but I've given you it in class, so you should be able to follow it. This is designed to give you a help. Only if you're really stuck should you use it, but it'll go through probably one of the better methods to use for profit and loss and balance sheet if you get stuck. Okay? Now, obviously this exam question was done in 2011, but it's a good one for you to have a look at to get the feel for your 60-minute exam. The first thing you do when you get the exam is you should always make sure that it's the correct paper, the correct numbers are here, that you know you're sitting in the right paper, okay? Obviously in the exam, the first page should always be a profit and loss and a balance sheet. If it's not, don't panic, but in general, it'll be a profit and loss and balance sheet. And again, you get given the name of the person, and then you're probably going to get given a trial balance followed by lots of balance day adjustments. So we're going to have a look at the balance day adjustments, we're going to have a look at who this is for, and we're going to have a look at a method of doing it. You're going to need a ruler and a calculator to get this done. Okay. When you open the paper, it's important that you read exactly who this relates to. Okay. So on the 31st of March 2011, the following information was available from the books of Freda Kins, a sole trader. She works on her own, Freda. And below, obviously, we've got the trial balance here with our debits and our credits, okay? And then all of the items down the left here. The first thing you should do is just have a little bit of a look at the list to see if there's anything on here that seems out of the ordinary. Okay, rent, capital, sales, just scan your way down the list. Discounts allowed, debtors, creditors, motor vehicle expenses, drawings, bank, stock, opening stock, loan, carriage inwards, commission received, a bit of a revenue going on in this question, some returns for purchases and sales, discounts received, equipment, and motor vehicle. We've got some P for D on equipment as well. Alright, okay, so we've had a little bit of a look down. Nothing on there seems out of the ordinary or should scare us at this time. Okay, so if I zoom out a little bit again. Alright, now, the first thing we want to do is have a look at the adjustments, okay? And the first adjustment that you have is going to be at the bottom, and there it is there. The closing stock at 31st of March 2011 is valued at £21,000. Straight away, we know that that's a current asset, okay? And that's where it goes. It's also going to go on the cost of sales as closing stock. But at this time, we just need to know where it is, and we need to know to put it in. Okay, let's now have a look at the second balance day adjustment. At the 31st of March, general expenses owing amounted to £230. What does the word owing stand for again? Accrued. So therefore we owe some general expenses for £230. So what we do is we go up to the top. We're going to find our general expenses, wherever it is. Scanning the list, general expenses, there they are there. Alright, and the adjustment said that we owed another £230. Okay, just like that. So I'm going to add 230 to that figure there. Now remember, if you mess around with your trial balance, obviously you've got to make it balance because your debits must always equal your credits. So what I need now is another adjustment, and of course it's an accrued general expenses. Okay. Now, if you want in the exam, you can write it anywhere as long as you remember. But I always like getting a separate piece of paper, and on the separate piece of paper, I'm going to write accrued general expenses, and it was, I think, £230. Okay, just like that. Right, because I'm going to use that when I do my balance sheet. Now remember, the word accrued means owe, so I owe a general expense. That makes it a current liability, and it's really important that you label it now so you don't get confused later on. Okay, so there's the first one. Okay, now sometimes in the question they will add another one in here. Commission received was owing to Freda Kins for £500. So here we go, commission received, that's a revenue, and we are owed some more revenue. We are owed some money. and it is £500, okay? So, again, if we're owed a revenue, let's scroll up here and see if we can find where our commission received is. There it is there, commission received. We are owed another £500. So on the right-hand side of that, I'm going to write £500, okay? We're owed some more commission. This is the one that kids always struggle with in the exam. What you do need to do is bring your little workings over and go, oh man, what does that £500 actually represent? I'm owed some more money. Again, the word owed is always the same, accrued. What is it for? Commission. And how much is it for? 500. But here comes a tricky bit. Is it a current asset or a current liability? The easiest way to remember is this. We are owed a revenue. That's the same as being owed money by a debtor. We are owed revenue. Therefore, debtors are a current asset, and so is accrued commission. Alright? And again, I'm just building a list of my adjustments that I need to put in. Alright, let's keep going down to some more sneaky balance day adjustments that are stuck into one question. Insurance was prepaid by £300. So remember, prepaid means down. Okay? Whilst an accrual means up, a prepayment means take it down. And what do I need to take down? I need to take down my insurance by 300. So if I just zoom up again, insurance, just scanning the list, insurance, can't find it, I'm running out of time in the exam, I'm getting stressed, there it is there, insurance, okay? Remember, insurance was prepaid by 300. So I'm going to write a little minus there, and I'm going to write 300, because I have to take it off. Okay. Now remember, I've done my prepayment there, okay, I've taken it away, and I'm going to write it here as one of my adjustments that I need to do as well. Prepaid insurance for £300. Okay, and again, I want to label it so I know where to put it in the balance sheet. Remember, prepaid, a prepaid expense is kind of a good thing. Now, you put money on your phone, you can use it again later on, and technically they owe us that money back until we use it. So it's a current asset. Okay, it's a current asset. If I scroll down to the bottom again, let's have a look. Any more adjustments? Insurance was prepaid, so I've done that one. Electricity was prepaid by 200. Remember, prepayment means down. So what do I have to do with my electricity? I need to take it down. So let's go up and find out where my electricity is. Electricity, scanning the list. There it is there. And I need to take it down. I'm going to take it down by £200. Just like that. Okay, so I've taken my insurance down, my electricity down, and now what I'm going to do is I'm going to add that to my list of adjustments in the balance sheet, and I'm going to call it prepaid electricity for £200. And again, I've prepaid it, so that's a good thing, so it's a current asset. Alright, I'm going to put it on my list of adjustments. Okay, so if I go back down again, I've done my accrual for that one, I've done this one, I've done my insurance, and I've done my electricity. So I've done all those adjustments now, okay? Let's keep going. During the year, Freda took stock. Remember Freda? She's the owner, okay? And whenever the owner takes something, it's drawings, okay? What did she take? She didn't take money, she took stock at a cost price of $15.50 from the business for her personal use. This transaction has not yet been recorded. Okay, so the owner's taken something. What have they done? They've taken stock. So we've got a choice. We're going to do this here and put it into drawings, the $15.50, okay? Because the owner has taken money out of the business. So I'm looking at the list, rent, capital, drawings. Oh, there it is there. Drawings was right there. So I'm going to add the amount for drawings, which was $15.50. Okay. Now, whenever the owner takes stock, the other one you need to adjust is your purchases. We can no longer have our purchases at $49,000 because the stock that we brought, some of it's been taken by the owner. So I'm going to minus off $15.50. Okay, just like that. All right. And when I do the profit and loss, I've got to remember that. Okay. So let's zoom down to the adjustments again. So I've done that one. Sweet. I've recorded it in the accounts now, so we're rocking. There was a motor vehicle purchased on the 1st of January for $8,500 plus $500 for painting the name of the business on the motor vehicle. this £500 has been charged to motor vehicle expenses. Okay, so there's something funny going on here. We've brought a new motor vehicle for $8,500. Let's have a little bit of a check, did we? Oh yeah, there we did. Look, motor van. Cool, sweet. We bought it this year, so there's no depreciation on it yet. But we're going to have to calculate it. So what on earth are they talking about? This additional £500 for putting the name of the vehicle on the side. Seems odd. It had been charged to motor expenses. I just want to draw a diagram. Come on, you know, it's my crappy car. There it is there, okay? Oop, there it is there. Again, we bought a car, £8,500. What type of expenditure is this? Can you remember? We've bought an asset. London is what? That's right, it's the capital of England. So, this here is capital expenditure. Okay, so it's right, we've bought an asset. Alright, but what about this £500 that Freda did? She got her name printed and embossed on the side of the car for a business like that. Cost us £500. And she's put it into, I think it was general expenses, wasn't it? Yeah, no, it's been charged to motor vehicle expenses. This £500 should be included in the cost of this asset. Because it is a capital expenditure. It is creating an asset, and it's the first time she's done it. If she'd actually damaged the car and paid £500 to fix the windscreen, then that would be repairs, and that would be an expense. But it's the first time she's done this, it's a one-off expense most likely, so therefore should be included. So the cost of the vehicle isn't $8,500, it's actually £9,000. Okay, so what do we need to do? Well, that extra £500 has been charged to motor expenses, and that's not right. It needs to come out of there, okay? It needs to go into the vehicle. So let's go up and try and find our motor expenses. Doosh, there it is there. I want to minus off £500, and I want to add it to my motor vehicle cost. Where is it? There. So I'm going to add 500, okay? And there we go. That's me making sure I've recorded my capital expenditure the right way. Okay. Well, we're still going. We're trucking through this exam. So we've done this one. Let's have a look at note 5. The provision for doubtful debts is to be provided for a specific debt of 100 plus 2% of the remaining debtors. Okay? So we've got a specific debt of 100 there, and the rest of it is 2%. So what's the calculation? Let's have a look. Have we got any debtors up here somewhere? I'm hoping we do. Oh, there they are there. There's our debtors there. Okay, so remember the calculation. We've got to do our specific debt, which is 100. So we go 7,700. That's our debtors figure. Minus off the specific debt of 100. Let me double check that was 100, wasn't it? Yep, it was 100. Okay, so we get 7,600, and then I need to times it by the specific debt of 2%. Okay, so what's 1% of that? 76. So 2% will be 152, right? And then I need to add on my specific debt again. So my new P for D should be £252. Okay, that's what it should be. Okay, take off the 100 specific, work out the percent, and then add it back on. So I've got 252. So what's currently in my provision for doubtful debts? Oh, there it is there, 187. So what you have to do is make the 187 up to 252. So how much has it gone up by? Well, 252 minus 187 equals 65. So I want to add 65 to my provision for doubtful debts. Remember, that 65 is what it's gone up by. Whenever your provision for doubtful debts goes up, it's an expense. Okay? We've just seen there our provision for doubtful debts go up by 65. So I'm going to put that on my list here. Number 5, doubtful debt. For £65. Now what is a doubtful debt? Well, these are the debts you might not get back. And it's really prudent for us to call them an expense. We want to bring our profit down. So when I do my expenses, I need to put them in there. Oh, wow. So here we go. We're still going. We've now done our specific debt, doubtful debts, done that, we're away. Okay, the 10% loan is repayable in 2011. Right. So what year are we in again? Let's zoom back up to the top. We're in the year 31st of March 2011, right there. So how far away is August 2011? Oh, it's this year. We have to pay back our loan this year. They're trying to tell us that this in the balance sheet should be recorded as a current liability. Okay? We are owing this within the next 12 months, and that's the definition of a current liability. So what we do is we go back up here, we find our 10% loan, there it is there, and we put current liability next to it like that so we don't forget. We've got to make sure we put it in as a current liability rather than a long-term liability. Now, it's also a little bit of a trick, because in the question we should always check, even if they don't ask us to, we should always check if we've paid the correct amount of interest. So if you have a look here, the total amount we borrowed was 10,000 and the interest rate we pay is 10%. Remember, the interest rate is what we get charged every year for basically the privilege of taking out the loan. So, what's 10% of 10,000? It's 1,000. Where's my interest paid? I'm hoping my interest paid is somewhere. 10% of 10,000 is 1,000. Interest paid, there it is there, good. So I've paid the correct amount of interest. There is no interest accrual to make. Every single paper, you should check to see whether you've paid the correct amount. Okay. Now, and that's that done. All good. Looking good. Alright. Now, on the next page, we have to have a look here because it's given me depreciation. Depreciation is 12.5% on equipment, on cost, and of course cost means straight line. And we didn't buy any assets or sell any assets during the year, so that's good news because it makes it easier for us. Okay, so 12.5%. So where is my equipment? Where is my equipment? There it is there. Okay, equipment, 12.5% depreciation. Okay, so what's 12.5%? 12,000. What am I talking about? 11,000. Going crazy. 11,000 pounds times by the depreciation rate, which was 12.5%, and it's 1,375. So I need to add this year's depreciation to my P for D. All right. And remember, this year's depreciation is also an expense. So again, on my list, right, on my list of adjustments here, note number 6, I'll just put down depreciation on equipment for 1,375. And again, it is an expense. All right, got to put that in. All right. Now, we've done our depreciation on equipment. Let's have a look at the motor vehicle. The motor vehicle depreciation is to be provided at 25% per annum using reducing balance. Okay? A full year's depreciation is charged on vehicles owned at the end of the year, irrespective of the date of purchase. A full year's depreciation is charged on vehicles no matter when we brought it. That's beautiful. Makes it so much easier. There's no part year. Okay? No part year depreciation. Okay, it's easy for us to now do. So we just got to work out 25% of that new asset that we brought. Remember the value of the car? That's right, 9,000. Okay, so if I go down here, there's our car. Its total value is 9,000. So 9,000, and I'll just want 25% of it times by 0.25, and of course it is equal to 2,250. So what we'll do is we're going to put that on our adjustment sheet, because remember, there is no P for D here because it's the first time we actually brought this asset, okay? It's the first time we've done it. So we need to create two new things. We're going to create depreciation on motor vehicle, and it was for 2,250. It's an expense. And then also we need to create a provision for depreciation on motor vehicle for 2,250. Okay? Now remember, this bit here is the tricky bit. This provision for depreciation here is going to do what to the value of our motor vehicles in the balance sheet? It's going to take them down. So technically we call them a negative fixed asset. We just need to remind ourselves to minus it away from our fixed assets in the balance sheet. Okay, right, wow. So there we go. There is our adjusted trial balance. That's us with all of our adjustments there. Okay, we're ready to do our profit and loss and balance sheet, and also we've got our adjustments to include. Okay, with that it would be hard to get this wrong. But then again, under pressure in an exam, it's never that easy. Okay, you need to get to the next video in a minute, and we'll start putting in the profit and loss and balance sheet now.